Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right, today is all about the e-com squad, all right? Because in the fourth quarter of the year is when e-commerce really picks up for like everybody, right? Because we know that during the fourth quarter of the year, that's when Americans spend the most money, okay? And fourth quarter starts in October, but really for me, it starts at back to school. Back to school starts the spending season, right? Because you got back to school shopping going on, then you go into Halloween, then you go into Thanksgiving, then you go into Christmas and, all the other December holidays, Christmas, Hanukkah, Kwanzaa, and all of that. Then you have the new year, right? So that is those last couple of months of the year is when e-commerce is blowing up. All right. But what I want to talk to you about is making sure that you as the e-com seller are properly accounting for your e-commerce sales. Okay. Because this is really actually very important that you get this right, especially in the beginning, because if you get it right in the beginning, then when you grow, it won't be an issue. Okay. So what I'm going to do is I'm going to go to my screen. And hopefully this works out right, because y'all know, right? Y'all know. Okay. So here we go. So I did just a quick workup to show you what it's supposed to look like versus what's actually happening. So if you can drop a 2 in the comments and let me know that you can see my screen okay, then I will keep going. All right. But I will tell you why this is important right now for you to get this right. Because with e-commerce, they still have reporting issues. Okay. Reporting requirements, not reporting issues, reporting requirements. And so you have third party processors. You have your Stripes and your PayPal. You have Amazon that also has, report to the IRS. And so what you have to understand is that when they report to the IRS, all of these different types of platforms, when they report to the IRS, that they report your sales. Okay. So the third party reporting requirements is 200 transactions and $20,000. Unless you live in Massachusetts and Vermont, they want to hear from folks at $600. Okay. So it's important that you understand how the reporting happens so that you can properly account for it on your taxes. Because if what they report and your taxes don't match, then they're going to be coming for you. So I want to definitely make sure you get this right. So let's say you're selling on Amazon, right? You have a product that you sold for $100. Well, we know that Amazon takes their fees out, right? And so then they might send you $75. Well, then from that $75, you deduct your cost of goods sold, or if you have shipping or anything like that, and then your profit is $65. But what people are doing though is they're taking what Amazon pays them and then deducting their cost of goods sold and then deducting the Amazon fees down here, showing a lower profit. That is incorrect. Okay. This is the right way. This is the wrong way. Let me put that up there. I didn't even put that the wrong way. Okay. There we go. All right. So when Amazon reports to the IRS, they're not reporting the $75 that they paid you. They're reporting the $100 sale. Okay. That's a big difference. All right. So let's say that you're on eBay. Okay. eBay, you have that same $100 sale. We know that eBay takes out their 10%. So that leaves you with $90, right? And so from that $90, then you're supposed to deduct your cost of goods sold. You can deduct your PayPal fees, right? So with this, you have a profit of $67. That is the right way. Again, what people are doing is taking the $90 that they get paid, then deducting their cost of goods sold, their PayPal fees, and then deducting the eBay fees down here. And you can notice the difference in the profit. So what you have to be careful of is to make sure that you are you're reporting your sale. So it doesn't matter the platform, whatever platform, they have their fees, right? They have listing fees, they have sales fees. Amazon has got just because we Amazon fees, right? There's all sorts of fees that are associated with e-commerce. But what you have to make sure that you do is that you are reporting your gross amount. This is your gross sale. Okay, you have to report the gross sale, not what you made, not whatever the platform is that paid you, right? Because let's say, you have an Etsy store, right? We got all kinds of e-commerce platforms. You got, Etsy, Shopify, you got Amazon, you got eBay, you got Bonanza, you have, the yard sale sites, that's still e-commerce too. Okay. You got, OfferUp, you got Let Go, you got all Facebook Marketplace, you got all kinds of places that you can sell on, okay? But what you have to make sure you're reporting and when you're preparing for your taxes is that you are preparing with the gross amount, okay? And then subtracting all of the fees. So, so Amazon, they might have, like I said, the packing fee, the loading fee, the commission is just, like I said, just because we Amazon and we can fee. All of those fees get deducted from your gross sale, not what they paid you. Okay. So I beat that horse to death, I think. All right. So, so I have quite a few, e-commerce clients, right? And, and this is something that I have to go back and correct. And I want to make sure that when you're dealing with your tax professional, that you've done this work correctly. Because if, like I said, once you grow and you start getting to those reporting thresholds where, you've got these different platforms that are reporting directly to the IRS, when those numbers don't match or don't even come close, that's when, that's something that triggers an audit where the IRS says, okay, you have underreported your income. And depending on how much that underreporting amount is, it can cost you a lot. Okay. You will have, the opportunity to go back and amend and all of that stuff. But that's a whole bunch of drama that you can avoid if you get it right, this go around. Okay. So just get it right in the beginning. So you're reporting your gross sale and then you're deducting everything else out of that. Now, here's another thing too. If you are charging your customer for shipping, you can't go back and deduct that as an expense. Okay. So if let's say, you're saying, all right, I'm going to sell this product for, $14 and then I'm going to charge $5 shipping. If you are actually charging $5 shipping, you can't then go back and deduct $5 shipping because your customer is who's paying for the shipping. So don't make that mistake with your shipping as well. Okay. So that's it, you guys, for today's episode of Home Biz Tax Talk. And I will be coming out soon. I'm updating all of my resources, checklists for different types of industries so that you can go through and make sure that you are deducting your costs properly and so that you're reporting your profit properly. Because here's the thing, you want to pay, but you only want to pay what you actually owe. You don't want to pay too much, and you definitely don't want to underreport your income. Okay. Those are the two things we just don't want to do. Okay. So that's it for me, you guys. Thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9:00-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a great day, and I will see y'all next time. Bye.